Welcome to the Video CPA. It's good to be with you today. I'm Michael Scott, and I am the Video CPA. Today we're going to be talking about rules for filing head of household. And the reason I'm talking about this is because the IRS in the last few years has introduced due diligence requirements on taxpayers, and we'll get into that a little bit later on. Or on tax preparers, I should say, when filing a return that claims head of household status. And what that really means to me is that the IRS, there's been some abuse in this area, and the IRS is looking at it more carefully. So you need to be careful when you file head of household that you've got all your ducks in a row and that you're meeting all the requirements that you need to. So we're talking about head of household today. All right, so let's look at our affiliate marketing disclaimer, and then we've got our educational disclaimer. Now, the advantages of filing head of household, and there are some distinct advantages. One, you've got a lower tax rate when you file head of household, and as opposed to filing single. Not quite as good as filing married, but much better than filing single. So there has been some emphasis there to try to file head of household instead of single. Also, you get a higher standard deduction, which is important, and there's also a higher filing requirement. You don't even have to file a return in some cases, where you might have to file one if you're single. So there's a higher filing requirement. So these are the three main advantages of filing head of household. It does save you money on taxes if you can file head of household. So the requirements for filing head of household are, one, you've got to be unmarried or considered unmarried at the last day of the year. And we're going to talk about this considered unmarried in a little bit more detail, but unmarried or considered unmarried on the last day of the year. You've got to have paid more than half the cost of maintaining a home for the year, and we'll talk about that in a little bit more detail. And then you've got to have a qualifying person that's lived with you for over half of the year. Now, if it happens to be a dependent parent, they don't have to live with you, but most other people do have to live with you, and there's an exception or two to that. But so those are the three requirements: unmarried on the last day of the year, paid more than half the cost of maintaining a home, and you got a qualified person living with you. All right, sounds simple enough, but it's not, because the IRS has quite a few rules about what a qualified person is and what a qualified person isn't, and what costs are included in maintaining a home, that type of thing. Okay, so let's talk about a person that's considered unmarried on the last day of the year. Certainly, if you are unmarried and you've at the last day of the year, that counts. But if you meet the following requirements, even though you may be married still, you can claim head of household. All right. And those requirements are: you file a separate return, and that means you're filing married separately, you're filing head of household, or you're filing single. All right. You paid more than half the cost of keeping up your home for the year. Your spouse did not live with you during the last 6 months of the year. And if he did live with you and was only temporarily absent at the time for part of the year, he's counted as living with you. So can't live with you at all, basically, during the last part of the year. And that your home was a main home for your child, stepchild, or foster child for more than half the year. And you must be able to claim the child as a dependent. All right. Now, there is an exception to that if they live with you, but the other parent is claiming the child as a dependent, the non-custodial parent, for a year, you can still claim head of household. So those are the rules, and those are the rules for considered unmarried. All right, on the last day of the year. So you're either unmarried or you're considered unmarried. And if you're considered unmarried, you have to meet all 5 of these rules. So be aware of that, because if you use the wrong filing status and the IRS comes back and audits you, which is, not, there's always a chance of that. You know, quite a bit of money back. So let's go ahead and look at some of these in more detail. All right. Paid more than half the cost of maintaining the home for a year. Now, the IRS does have a worksheet that you can fill out that will help you with this, but basically the costs of maintaining a home include expenses such as rent or mortgage interest, real estate taxes, insurance on the home, repairs, utilities, and the food eaten in the home. Food eaten outside the home doesn't necessarily count, okay? So you take those costs into account. Add those up and compare them to what somebody else may have paid for that home. And usually there is nobody else. You're the one that's maintaining the home. All right, costs that you don't include, that's cost of clothing, education, medical treatment, vacations, life insurance, transportation. And then don't include the cost of your own services. If if you're cleaning the home, don't include the cost of your services. Don't give yourself an hourly rate, and also don't give yourself a member of your household an hourly rate. Okay, so don't include the cost of your own services. So those are the things that you should not include, and I'm sure you can think of some others, but primarily I'd be looking at those things that you can include and adding those up and comparing them to someone else who may be maintaining the home. All right, now let's look at the qualifying person, because this is more complicated than the others actually. And the IRS has this big table here that'll help you figure out whether you have a qualifying person or not. Okay, and certainly a son, a daughter, a grandchild lived with you more than half of the year. If you are single, they're gonna qualify. Okay. If he or she is single and they're living with you, like I said, they're going to qualify, even though they may not be a resident or a citizen. But if they're married and you can claim them on your tax return, then you can qualify them. Then it's a qualified person. If they're married and you can't claim them on your tax return, well, then it's not a qualifying person. So just remember that about your immediate family members, okay? Son, daughter, grandchild, that's an extended family member in some ways, but if they're single and they've lived with you over 6 months of the year, you can take them as a qualifying person. They help you qualify for head of household, okay? So let's look at other types. Qualifying relative, who's your father or your mother. Okay, and I said that a father or a mother don't have to be living with you in order to qualify you as head of household. But they do have to be claimed as a dependent by you. So you have to be able to claim your father or your mother as a dependent in order to file head of household with them. So that's the difference with your father and your mother. They have to be claimed as a dependent. They don't have to be living with you, but you do have to claim them as a dependent in order to have them qualify you to file head of household. Now, the final one is a qualifying relative other than your father and mother, such as grandparents or brothers or sisters, who meet certain tests, okay? If they lived with you more than half of the year, and you can claim them as a dependent, then you can use them to qualify for head of household. If they didn't live with you for over half the year, well, then you can't. They're not a qualifying person. All right. And then if they're qualifying relative only because he or she lived with you all of the year, it's not a qualifying person either, and you can't claim them as a dependent. It's not going to qualify. So that's the kind of stuff you're looking at as a qualifying person. So you've got to have all three of those things in order to file head of household, and that gives you a little bit more explanation of on each one of those points. So again, the qualifying person, I think, is the most difficult to come up with. Maintaining a home over 50% is not necessarily that difficult, and then certainly if you're not married at the end of the year, that's fairly easy. If you are married but considered unmarried, you've got to go through that rationale to see if you meet those steps to be considered unmarried. All right, so I mentioned taxpayers now have due diligence requirements, which leads me to believe that the IRS is looking at this filing status more carefully. There has been evidently some abuse here. And so even though you may not use a paid tax preparer, you are a tax preparer, and you're preparing your own return, but you better have pretty good records that show that you're able to file head of household if you're preparing your own return even. And that means you need to be able to show that you maintain more than half the cost of the home. You need to make sure that you can show that you were unmarried at the end of the year. And if you got a divorce during the year, you need to keep that divorce decree. And you need to make sure that you can show that you had a qualifying person living with you. So even though the due diligence is a requirement for tax preparers, you're going to have those records as well as your own tax preparer. And if you use a paid tax preparer, he's going to ask you for those things. He's going to ask questions because it's his responsibility. And if he doesn't ask questions, he can get a $500 fine on this, so he can be penalized. So just be aware that your tax preparer might ask you some additional questions. And this goes to any credits that you might be taking, child credits, earned income credits. It goes to all those things. There's due diligence requirements now on all this. So your CPA or your professional tax preparer is going to be asking you more questions on this stuff, and just understand why. All right. So thanks for watching. It's very interesting that head of household is the only filing status right now that has got due diligence requirements on it. Married filing jointly doesn't, single doesn't, married filing separately, but head of household is the one that's being questioned. So that's why I've done this video on head of household, and because it is the one, it looks like, that's being questioned more than the other filing statuses. So anyway, join me again. If you haven't subscribed, hit the subscribe button. It's good to have you with us. And if you need more information on tax subjects in more detail, go to the Video CPA's targeted tax training, and we have courses out there at www.thevideocpa.com.